Good morning, colleagues, TESD and CA members, as well as our presenters, and welcome to today's TESD webinar. Thank you for joining us as we continue to equip our industry with this practical knowledge that strengthens compliance and enhances employee protection. It supports sustainable workforce benefit strategies. In today's evolving labour environment and understanding both retirement funding solutions and statutory protection frameworks, it is essential for our organisations that want to remain competitive while safeguarding employee financial well-being. We are privileged to have two respected organisations presenting today. Ensimini Financial Services, who will share insights on the CAPES National Provident Fund and flexible retirement benefit solutions. And then we have Rand Mutual Assurance, who will guide us through key aspects of COIDA benefits and employee protection. To ensure a smooth session, we will ask that all questions be placed in the chat box and not the Q&A box during each presentation. We will then address the questions immediately after each presentation before moving on to the next session. It is now my pleasure to hand over to our first presenter, Jaco Pretorius from Ensimini Financial Services. Jaco, over to you.
Thank you very much, Lisa, and thank you very much for the opportunity to speak to everybody. I'm really looking forward to it. As Lisa mentioned, I'm going to be talking about the CAPES National Provident Fund today. But before I kick off, just by way of introduction, I'm Jaco Pretorius. I'm the founder, chief executive of Ensimini Financial Services. Been in the industry for, as you can see from the amount of grey hair, for 34 years, so quite a lot of experience, and there's very little in the industry that I haven't seen or heard of. My discussion points today, I'm going to do a quick introduction to Ensimini, and then I'm going to be spending quite a bit of time going through the CAPES National Provident Fund, explaining to you the background, why it was created, looking at how it's grown, and the type of benefits that it's offering. During that session, I'm going to focus quite a bit on explaining the flexibility around the CAPES National Provident Fund. Then I'm going to talk quite a bit about fees as well. It's something that is very near and dear to the Board of Trustees of the CAPES National Provident Fund, and it's something that is often misunderstood in the employee benefits environment. I'm going to spend a bit of time on that, showing you what the fees are on the CAPES Fund, and also showing you what the things are you should be looking out for when you do compare retirement benefits of different funds. And then I'm going to conclude with details on the communication and online access channels that are available for members and employers on the CAPES National Provident Fund. So firstly, a little bit about Ensimini. For those of you who are not native Zulu speakers, Ensimini means in the field. So both Sipho and I, Sipho Dube, who's my fellow director, when we started the business many years ago, we realized that retirement funds are not dissimilar to planting a tree. Now, both Sipho and I also came from rural backgrounds. I'm from Malanga and Sipho from KwaZulu-Natal. And obviously around us as we grew up, we saw maize farms and we saw the planting of maize as a seasonal thing. And it struck us that when it comes to retirement funding and when it comes to us as a service provider to retirement funds, our role should be that same process of helping, planting the seed, helping with the nurturing and the growth, watering it, looking after it, taking out the weeds, and advising clients. And I think the name reflects on what Ensimini stands for, which is strong foundations, strong root system, make sure the basics work properly, and then nurturing the relationships with the employers and with the members that participate in the fund. What do we do? So we are a financial services company, but we're very specific about what we do. We are not a big insurance company. We don't try and compete with all the other players in the market. We've set ourselves to be expert in providing advice to retirement funds and ancillary benefits. Those ancillary benefits are typically your death, disability, and funeral type benefits. And then as specialists in the field of retirement fund administration. In fact, we just recently signed an agreement where one of the the big providers of financial services in the company has appointed us as the party to whom they're going to be outsourcing a part of their retirement fund administration work, which I think is a confirmation from a big player in the industry that after having looked around at the industry and trying to find the best administrator, they decided that Ensimini was the company they wanted to partner with. We've been around for quite a few years. In September this year, we'll celebrate 15 years of existence, which we're very excited about. Sipho and I started the company in 2011, and we're both still involved in the business, both still involved in the day-to-day running of the company, and still involved in the day-to-day engagement with clients, in particular on the CAPES National Provident Fund. It's a fund that we were involved with from when there were 0 members, and we've been around and helping the fund with the phenomenal growth it's seen over the years. And as I mentioned earlier, our focus is retirement funding and associated benefits. We are not an investment company. We use and advise clients on which investment companies to use. So we're totally independent from that perspective, and which means clients can use any investment company. The same applies for insurance. We are not an insurance company. We do engage with a variety of insurance companies, pretty much all the big ones and quite a few of the medium and small players. And every time we need to advise clients on insurance arrangements for their staff, we're able to scour the market and find the best value for money for the client at that point in time, based on what the client needs. So that independence, I think, sets us apart from a lot of our competitors. We're based in Auckland Park in Johannesburg, but from Auckland Park, we're servicing clients throughout the country. And literally, we started putting a list together of the number of towns in which we have clients. And if you look at the map of South Africa, we've got clients in St. Helena Bay, all the way through the Garden Route, Eastern Cape, KwaZulu-Natal, all the way up to the northern rural areas in KwaZulu-Natal, and clients as far north as Messina, and literally pretty much everything in between. And I think the one benefit that COVID left with us that I think will be lasting is the explosion of the technology infrastructure that is available to engage effectively. But at the same time, we do spend a lot of time on site. One of the things that Sipho does, Sipho Dube, who's the consultant to the fund, and also one of our directors, as I mentioned, he spends quite a lot of time on the road, on shop floors, engaging with members, educating members, and at the same time educating employers on the latest developments and understanding that helping them understand the full value of the CAPES National Provident Fund. From a client perspective, yes, we are small compared to a lot of the competitors we deal with, but at the same time, we are big enough, as I illustrate with a number of clients, a total of 600 employers that participate in the various funds we look after. Membership of around about 200. In fact, it's just slightly over 200,000 at the moment. Those funds have assets in total of about 16 billion. And the type of clients we look after standalone funds. Now, standalone funds would be a bespoke fund for a particular employer, like I'm going to use an example, Wits University, their retirement fund appointed Ensimini as their administrators. Then we also look after a variety of umbrella funds. The CAPES National Provident Fund is one such umbrella fund. It's the biggest umbrella fund we look after in terms of members. But we also have quite a few other umbrella funds, our own Ensimini Umbrella Retirement Fund, which is a commercial retirement fund, and then quite a few retirement funds that are sector specific, in the textile sector, in the clothing sector, etc. And then we also advise to a lot of companies, help companies find the best fund for them. And again, the sizes of companies, large, medium, small, local, multinational, it doesn't really matter. Obviously, what we try and do is make sure that whatever relationship we enter into makes sense and makes commercial sense for both us and for the employees of that particular client. And unfortunately, sometimes when a client is extremely small, that just does pose challenges, and it requires us to think out of the box. The next slide is just a bit of a brag slide, just showing the logos of a few companies that we do business with. These will be companies that are on some of our umbrella funds. You can see the CAPES National Provident Fund front and center, some of the names in the industry, and I do apologize if you are participating in the CAPES National Provident Fund and I omitted to put your logo on here. But quite a few companies, as you can see, in the temporary employment sector that are on the CAPES National Provident Fund. So let's talk about the CAPES National Provident Fund now that I've hopefully given you a bit of an introduction into Ensimini. And just a reminder, if you do have questions, please feel free to pop those questions on the chat, and we will deal with them at the end of the session, as Lisa suggested. So why was the CAPES National Provident Fund established? Now, I want to take you back to 2010. It was literally on the eve of the Soccer World Cup. The talk of town in the labor market in any event was ban labor brokers. And those of you who've been around, were around at that time, you will recall that it was quite a stressful time for the industry, for the temporary employment sector. And that led to discussions within CAPES to say, well, one of the issues, one of the criticisms of what was then referred to as labor brokers was that their employees, the assignees, were not getting the benefit of retirement funding, medical aid, etc. And CAPES then approached a number of providers with a request or the challenge, see if you can set up or establish a fund that can cater for our unique situation. Because the industry, the retirement funds industry, has always been geared for a regular contribution with a pretty much a stable salary and a stable recurring contributions month by month. What it really struggled with, and I remember the first client that came on board was Kelly, and what they struggled with is finding a home for those Kelly temps where you can have somebody that works for a few hours a day at one site, and then a few hours a day, so a few hours a week at one site, then a couple of days not working, and then a few hours at a different site or for a different company. And it created a lot of problems in terms of the way contributions were deducted, and most importantly, the way fees were recovered. And we remember seeing instances where members were contributing to the fund, but they ended up with negative savings at the end of the month because of the volumes or the quantum of the earnings versus the quantum of the fees. So when we were tasked to try and put this together in 2010, we spent quite a bit of time with the South African Revenue Services, who was the main, let's call them at the time a stumbling block. That has changed quite dramatically, but at the time they were very reluctant to agree to us registering a fund and very reluctant to give the tax benefits that are associated with a retirement fund. But ultimately, after a lot of engagement, we were able to set up a fund that was dedicated for the temporary employment sector. And the aim was to provide flexibility around contribution rates, because a lot of you might have a contract at company X, a contract at company Y, and the required contribution rates at company X for the people placed there very often has to be matched to the permanent staff, whereas those at company Y had to have a different contribution structure and maybe even a different death, disability, funeral structure. And within the CAPES National Provident Fund, we can accommodate that. We can have one employer have multiple categories for sites at different companies. So that flexibility, I want to say, is limitless. I always get warned by my operations team not to say that when I'm busy marketing the fund, but literally we've got I think about 80 different sites on the fund, or 80 different companies on the fund, with probably about 160 different contribution and benefit combinations on the fund. So there's very little that we will not be able to do. At the same time, we had to make sure the fund is optimized in terms of how it accommodates low and fluctuating contributions. Now, traditionally, when it comes to fees on retirement funds, your administration fee is R1 per member per month. And when we started the fund off, we realized when we got Kelly Thames as the first client, we had to go about this totally differently. And ultimately, what we settled with the Board of Trustees was a fee structure that is based on how much savings the member has in the fund. And then there's a maximum fee and a minimum fee to create a bit of flexibility so that a bigger portion of what members save when they start saving early on is allocated towards retirement savings. So members will start seeing the accumulation of that retirement benefit a lot sooner than they would otherwise. And then, of course, the main thing was to enable the ability to provide benefits initially, but more recently, it is perfectly positioned to help you comply with equal pay for equal work dispensation. And that is something that we've seen as a lot of new companies are joining. They found a significant comfort in the ability that concern for theirs is off the table. For example, we have a participating employer currently. They in the retail sector. There's a lot of pressure from the trade union in that sector for the members to join the big trade union fund. In doing the comparisons, the cost comparisons in terms of the administration fee, the investment fee, as well as the insured benefits, the CAPES National Provident Fund is able to provide it at a significantly lower cost to those members, which assists quite significantly in that debate as well. And as time has progressed, we realized that the CAPES National Provident Fund, whilst we originally designed it for temporary staff, more and more companies came to us and said, it doesn't make sense for us to have our temporary staff in one fund and our permanent staff in another fund. Can you accommodate the permanent staff? And 9 times out of 10, because of the way the fund is structured and the fees are structured, those permanent staff members enjoy lower costs on the CAPES National Provident Fund with similar, or in some cases, better benefits than what they had elsewhere. So it's not only for temporary staff, it is a fund that perfectly caters for permanent employees as well. This just gives you an indication of the growth of the fund. You can see from a zero base in 2010, the fund at the end of 2024, just over 27,000 members. It's reduced a little bit because obviously the membership is based on funds or employers that participate in the fund. Now, what we've seen over the years, if a particular company loses a contract, I'm going to use Simba, and I don't know why I always go back to Simba. It was used to be a client of mine many years ago, but there are people, temporary employees based at Simba, that since the CAPES fund started, some of those people have worked for 3 different employers, but still at the same site as Simba changes the provider of their temporary staff from time to time. And in particular, last year, we saw quite a significant chunk of people move out where a company decided to consolidate their staff on another fund. And hopefully, we are engaging with them to show them the benefits of remaining on the fund. But nevertheless, the fund is still sitting at over 25,000, just short of 27,000 members, and the assets is just over 118 million rand in assets. With regards to the governance structure, for those of you who do not know how retirement funds work, it's important to know that a retirement fund is a separate legal entity. The assets of the fund is held in the name of the fund. The fact that we as Ensimini are the administrators, we're merely a service provider. So the fund has a set of rules that's registered in terms of the Pension Funds Act and approved under the Income Tax Act for members to enjoy the income tax benefits. And it has a board of trustees that manages it. The board of trustees is totally independent from all the service providers. You have a number of people that are nominated by CAPES, and then there's a professional independent principal officer and trustee on the fund as well that ensures the fund complies with all governance requirements. And I stand corrected, but I did see at least one of the trustees, Bev Jack, who's one of the trustees, is in the meeting as well. The service providers, so these are parties that the fund board of trustees appoint to provide specific services. Our role as Ensimini, we do the administration, consulting, and actuarial work. BDO South Africa are the independent auditors. Korean Capital is the investment manager. And Alexander Forbes are the investment administrator, while Standard Bank are the funds bankers. Every participating employer can select which company they want to appoint to provide their risk benefits. So that is not determined by the trustees. As a participating employer, you have that flexibility, and Ensimini's role as consultants, we will help you facilitate whatever insured benefits you will need, and we will identify the best insurance company with the best terms, conditions, and rates for your specific needs. So what are the benefits that the fund offers? Firstly, it's a defined contribution fund, and all that means is the benefit is built as a function of what the member has contributed, plus investment return minus cost. And that term we refer to as the fund credit. I mentioned a minute ago that it can be for both temporary and permanent employees, but very important is there's significant flexibility in terms of membership. You can make it compulsory. We know that sometimes you'll get a contract from a particular client that says all the members must be on a retirement fund. It is compulsory, and these are the benefits that they must have. So that can be accommodated. But increasingly, we've seen a lot of instances where a client does not require the staff that you place with them to have retirement funding arrangements. And then it becomes very difficult. The economics behind forcing members onto it very often will make you uncompetitive. So what we offer there is the option for those instances where you have staff or temporary employed staff that and are placed at companies where it's not a prerequisite for them to have retirement funding. You can offer it to them on a voluntary basis. So they can elect on a voluntary basis whether they would like to join or not. And again, from a flexibility perspective, that is something that very few funds offer. In fact, we have not come across another fund that offers that flexibility that members may voluntarily select to join or not. Very important just to note, if a member has elected to join, they can't decide to unjoin. They've got to remain a member of the fund for the duration of their employment. When it comes to contribution, of course, just a reminder, the Income Tax Act allows you to deduct up to 27.5% of total remuneration for income tax purposes. And that's subject to a maximum of 350,000 Rand per person per annum. Members may also make additional voluntary contributions. So over and above whatever, if there's a compulsory contribution rate of 10%, members may, via the company's payroll, contribute an additional amount, whether it's a fixed Rand amount or whether it's an additional percentage. That flexibility is subject to what the employer can accommodate on their payroll. Each employer will set the contribution rate for their members or for groups of members. As I mentioned earlier, if you've got different sites where there are different of your staff placed and they need to have different arrangements, we can facilitate that as well. You can there's this misperception that the contributions that the member makes must be matched by the employer. That is not true. It's not a requirement, especially where there's a voluntary contribution, where employers do not want to match that contribution. They're not required by law to do so. An employer contribution could be zero whilst the member contributes. And we can also offer member level contribution flexibility, where a member can be given a range of options from which to select. And again, when it comes to the voluntary participation, that is a very common option that is put, where members are given the option of typically a 2.5%, 5%, 7.5% contribution option to select from. So as you can see, when it comes to membership and contributions, a lot of flexibility that you probably won't find with a lot of other traditional umbrella funds. Let's look at the benefits. Now, hopefully all of you have become aware of what it was referred to as the two-pot system. It's in fact not a two-pot system. Technically, it's a multiple pot system. And I'll explain that. So I'm just going to take a minute or two just going through that. I'm going to do my best not to convert it into a lecture because it is quite technical and quite complicated. But this change happened in September 2024. So up to the end of August, everything that you had saved in the fund was defined as your vested pot from the 1st of September. And if a member was on the fund as far back as 1 March 2021 and stayed on the fund, the member will have a vested portion and a non-vested portion in the vested pot. Quite a mouthful, very complicated. Heaven knows why we've decided to complicate it this much, but nevertheless, that is what we have to deal with. I'll talk a bit later about how these different components are paid out at different stages, but that's the first pot, is the vested pot. If you were over 55 on the 1st of March and you stayed in the fund, you will not have a non-vested portion of the vested pot. Then from the 1st of September, 2 new pots appeared. It's called the savings pot or the retirement pot. And for those of you who might be used to the term savings component or retirement component, we use the term pot because that's the terminology that everything started off with. So those are the 3 pots a member will have. If a member only joined the fund after September 2024, they will only have 2 pots. But if they were on a fund prior to September 2024 and they have money in the fund at that point in time, they will have 3 pots. Of course, on the 1st of September, there was a once-off transfer from the vested pot into the savings pot of 10%. It's capped at 30,000. And after that date, the contributions that are made are split between the savings pot and the retirement pot, with 1/3 of the net contributions going into the savings pot and 2/3 into the retirement pot. And contributions, just for in case you weren't sure, member contributions, employer contributions, and any lump sum disability benefits that are brought in. At retirement, each pot has its own rules in terms of what gets paid out as a lump sum, or I use the term cash. I probably should change it to lump sum. We don't hand out shoeboxes full of what's it, purple, blue buffalo notes. It's just a lump sum payment and what must be used to purchase an annuity or a pension. So the most complicated one is the vested pot. This is the one that if you were a member before September 2024, the vested portion of your vested pot, that you can take up in cash, but the non-vested portion of your vested pot, so that's the money that was contributed from March 2021 up to the end of August 2024. You're only allowed to take 1/3 of that as a lump sum. Everything else must be used to purchase an annuity. You may, of course, instead of taking cash, you can take everything as an annuity. Fortunately, that's a decision you only have to make when you retire. You don't have to make the decision earlier. Your savings pot at retirement, you take that out in cash, but you can also take it out as an annuity if you want. Your retirement pot, however, you cannot take anything out in cash. Everything must be taken as an annuity. So it's quite a significant change in terms of the way we were used to operate on Provident funds. Before 2021, you could take everything out as a lump sum, and that's gradually changed, and it's going to change. The impact it's going to have is going to continue to accumulate, and ultimately, members will have a much smaller portion that they will be able to take as a lump sum because of the way the contributions are allocated. Taxation also very specific. When you take anything as a lump sum at retirement, there are specific tax tables that gives you up to 550,000 tax-free, and then the tax rate increases incrementally as the benefit increases. Any annuity that you take, a monthly pension, that'll be taxed on a monthly basis as and when you take it out. There is, however, a caveat, something that is referred to as small annuities, or the Greek term is for small is just the de minimis amount. So if the retirement pot, in other words, if the portions that you must take as an annuity collectively is less than 165,000, you may take everything in cash. So then that changes. You may also take the retirement pot in cash, but only if the non-vested portion of your vested pot plus your retirement pot is less than 165,000. Upon termination of services, things have changed quite a bit, and this is something that's causing a lot of frustration for some members. Because members were used to, I retire, I can take all my money. Now that has changed. When you leave employment, when service is terminated, you can still take that vested pot. Remember, the vested pot, everything you saved up to the end of August, plus the growth on it until you retire, you can still take that as a lump sum. The retirement pot, you may not take it out as a lump sum. It must stay in the fund, or you can transfer it to another fund into the retirement pot of another fund. The savings pot you could take out in cash. In fact, legislation is about to change in that regard. But for now, the savings pot, you can only take a payout once per year. So if you've taken a savings withdrawal in the tax year and you resign in that tax year, you can't take it out again unless the benefit is smaller than 2,000 Rand, in which case you can take the whole lot out as a lump sum. And again, from a taxation perspective, specific tax dispensations that apply, and again, the taxation of the savings pot, there's talk that might change, but for now, your lump sum that you take out of your vested pot is taxed in terms of the retirement lump sum tax tables. Now, upon withdrawal, you only get 27,500 tax-free, and then incrementally over and above that, there's an increasing tax scale that applies. Of course, the retirement pot, because it stays in the fund, there's no tax that applies. So I went the wrong direction. If you pass away, all the pots are basically poured into one pot. And that can either be paid as a lump sum to your beneficiaries, or your beneficiaries may elect to get it paid as an annuity. It's something that a lot of people are often not aware of. If you take it out as a lump sum, if it's a significant benefit, there might be a lot of tax. And for some people, the option of taking it as an annuity becomes a significant benefit from a tax perspective. And the taxation on death, it's taxed as it is taxed now, the same lump sum tax tables that applies to retirement. Then as an employer, you can elect to add a variety of additional benefits to what you're offering to members, whether it's the same for everybody or different benefits for different groups of people. And here we facilitated arrangements for quite a few, I think 38 different arrangements we've put together for different employers with different death benefits, disability benefits, severe illness, spouse's insurance, funeral insurance, etc. So quite a bit of flexibility. And again, as I said earlier, because we're totally independent from insurance companies, we can help you find an insurer that premium rates and offering best match your needs. And on an annual basis, that gets reviewed, and we make sure that the insurer that you're with is still the best provider for you. So that deals with the benefit component. I want to spend a few minutes on the fees and costs and investment returns, because this is something that you're going to look at when you do comparisons. But very often we find that because of vested interest, often because of vested interest by advisors or by service providers, you get pushed into a direction without fully understanding the impact. Now, the first thing I want to highlight is understanding the fees or the impact of fees on retirement benefits. I've listed the four main fees in order of the impact they will have on the retirement benefit altogether. The one that will have the biggest impact over your membership of any fund will be your investment fees. And don't take my word for it, I'm going to prove it to you in a minute. The second one is the cost of risk benefits. That's normally a percentage of remuneration. Then advisory fees and administration fees comes third and fourth. And you will note your administration fees right at the bottom. And it's something that is often a function of the way our industry is structured. A lot of retirement funds are provided by companies that also do investments and also do insurance, do risk benefits. And they very often run these umbrella retirement funds as a means to an end. They want to get access to the investment fees or access to the risk benefits. But when you look at the comparisons, we see a lot of consultants, a lot of advisors tend to focus exclusively on item 4, which has the smallest impact on the benefit. So when you look at fees and look at costs, please make sure you understand all the fees, including the less obvious ones. I mean, a typical example is, and I'm not going to mention names, there's a big investment house that advertises a product at a certain fee. But the fee they advertise is the base fee. What is often misunderstood by clients is that over and above the base fee, there are other fees like transactional fees, like performance-based fees. And very often the actual fee that the member pay is double the base fee. So it's very important that when you look at fees, that you look at total investment charge. That's the term that looks at all the fees, making sure you do a like-for-like comparison. Then compare the monetary value of fees, because we get fees that are expressed as a percentage of assets, some expressed as a percentage of remuneration. And you won't believe me, not so long ago, I saw a consultant who added the percentage of assets to the percentage of remuneration in percentage terms, and then expressed that as a fee to a client. And to the client, it seemed reasonable, but the client failed to, or was not given, what does that convert to in rands and cents? And quite a lot of nasty surprises. I say look at past investment performance of net of fees, with an asterisk. Past performance is not a guarantee for future performance. But if you can see there's consistent underperformance of a portfolio, that should also inform your decision making to an extent. And then, happy for you to criticize me on this last one, because I am independent, but we will always say, look at the value of an independent provider versus a large insurance house. There's often this misperception that if I have all my eggs in one basket, I'm going to get the benefits of having everything in one place. But very often what we find, if you don't have a say in terms of where the investments or where the insurance is placed, the risk benefits are placed, you become a price taker. Your ability to negotiate price is severely hampered because you've got this all-inclusive package. And if you break it down in different components, more often than not, those end up more expensive. I mean, again, I make the point of a lot of providers of umbrella fund services do so merely to get access to the assets and the significant fees on the assets. I'm going to do it just kind of prove by way of two examples what I said a minute ago about which cost makes up the biggest part. I've taken two examples. Remember, one, a fund credit, so that's the savings in the fund of 300,000, remuneration of 100,000 Rand per annum. I've taken three funds, and these are actual examples in terms of the administration fee and the investment fee. To simplify my explanation or my comparison, I've left the advisory and risk benefit costs at the same level, because in the case of these three funds, this was a client that we advised, and we were asked to look at three different funds, and the advisory fees and the risk benefits, those were our fees, so those were standard across all three funds. And this is what it ended up with. Fund one, total fees of just over 6,300 odd, if you add all of those together. And you can see there, the biggest chunk of it is investment fees, and second to that, the risk benefits. So exactly what I said earlier. And you can see here the advisory fees and the administration fees in this example are smaller than those two. Fund two, similar situation, but a much lower fee, just over 5,300 Rand, with, again, the biggest chunk is the investment costs, then the risk benefits, and then the other fees. Fund three, where the investment charges were high, you can see the significant impact that has. If we just compare that, Fund three is 27% more expensive than Fund two. This is 0.5% of assets. Doesn't sound like a lot, but I'm going to show you how that what that translates to in the long term. I did another example in a similar way, where I just took a different fund credit. So this is a member with a higher savings, 100,000 instead of 300,000. Again, the same fee structure on the fund, and you can see the fee structure there. On face value, 32.50 Rand per member per month. A lot of people look at that and say, well, that is the fund I've got to be on because the admin fee is a lot lower than the 52, and heaven forbid the fund administration fee of 100 Rand, the fund with an administration fee of 100 Rand. But this is what it ends up looking like. Because of the larger investment fees, if you express it in Rand terms, Fund 3 is significantly more expensive than both the other two again. The amount by which it exceeds, that's still a 32%, I mean, this is 32% more expensive, although a slightly lower percentage of assets. But that is a significant difference of 11,900 versus 16,700 Rand in fees in total. And you can see where you need to pay attention to. People spend all their time looking at the cost related to that little blue part, but they forget to look at the costs related to that big green part, big yellow part. And this slide also just illustrates the impact of a difference in the value of investment over time. So what I try to do here is over a difference of 0.5%, 1%, 1.5%, and 2% over 10, 15, 20, and 25 years, just to illustrate the compounding effect of small variances. So if you look at that 0.5% variance we had on that first example, 0.5% variance over 25 years means the benefit could have been 13.3% higher. If the variance was 2%, your benefit could have been 64% higher. I mean, and that is significant. That makes the difference between being able to retire very comfortably at 65 versus being able to barely retire at 65 and having to keep on working beyond that date. And you might ask, but Jaco, these numbers of yours, are they realistic? And what I've shown you here, and I've given real life examples of actual fees. This was the total investment charge over a period ending. This for an actual client, an actual comparison that we were asked to do. And I'm going to focus, I'm not going to look at Symmetry. Symmetry is Old Mutual Multi-Managers, that's their new name. But I'm going to use the Corian Growth, and I'll explain to you why in a minute. That's the portfolio in which the CAPES fund is invested. Their investment charge is 0.7%. The Citadel Balance portfolio has done phenomenally well, but their investment charge is more than 1.8%. So you've got a variance of at least 1.1% just on your investment charges. And when you start compounding 1% over 20 years, that becomes significant. So now you've got to hope that the performance of that portfolio is going to be that much higher over the long term. And that's why I said earlier, one of the things, look at the net returns historically of the different portfolios. What are the fees on the CAPES National Provident Fund? There are 3 fees that get charged. First one is a fee that is charged by Ensimini for the work we do. And the fee ranges between 50 Rand 60 and 52 Rand per month. And that's based on a percentage of assets per month. The average fee that is paid at the moment, or that has been paid over the last year, was just over 20 Rand per member per month. The investment fees has 0.7% of assets per annum. And then there's an operational charge of 4 Rand per member per month that gets paid, that gets deducted from each member. And that is to fund the operational cost, the governance cost relating to running the fund. So very simplistic, very flat fee structure with little complications and very competitive. The trustees just went through a process, a fee review process as well. And the fees on this fund compare favorably to most of the big industry umbrella funds. When I say favorably, significantly cheaper from an admin perspective. But again, as I've been trying to warn you, be careful of not looking only at that fee, because it is the investment fee as well as the operational costs that also play a significant role, together with the risk costs that you will have. The performance of the fund's portfolio, I think that's quite important. The fund is invested in a portfolio called the Corian Growth Portfolio. I mentioned to you that it's managed. Corian Capital is the investment manager. Alexander Forbes does the administration of it. And the portfolio has really done exceptionally well for an extended period of time. Over the 1 year to the end of December, it returned 25.3% net of fees to members. The objective that the fund has set for its investment is an inflation target of real return target of 5% above inflation, which for that period was 8.7. So you can see an outperformance of 16.5%, give or take, over 1 year. It's a similar picture over 3 years. The portfolio has done exceptionally well. That benchmark, by the way, that's the internal benchmark that set for the portfolio. And you can see the dark blue line, which is the performance of the portfolio, which is what members actually got, outstripped both the benchmark as well as its objective quite handsomely, consistently over 10 years. So, I mean, that is something that I think is exceptional. And just to illustrate this, we've put together just a comparison of that portfolio. And what we've done here is we've compared it to the Alexander Forbes, or the Alex Forbes Multi-Manager Watch survey. So that survey basically looks at the other portfolios in the market that are trying to achieve the same objective based on their risk profile. And we've compared the performance of this Corian Growth portfolio over 1, 3, 5, and 10 years to the other portfolios. You'll see some well-known names, Alexander Forbes' own portfolios in there, the PPS Balance Fund of Funds, SAS Fund, SMS Sanlam Multi-Managers, 27 for Momentum, Symmetry, which is Old Mutual, and then Signia. You can see over 1 year, 3 years, 5 years, and 10 years, it has consistently outperformed all its peers. So again, that is quite a significant confirmation of the exceptional performance. And just for those of you who have an eagle eye, would pick up that on the previous slide, I said the performance of the AF Korean growth was 25.3%. Here I'm saying 26. The previous slide was the return after fees. This slide is the return before fees, because the Alexander Forbes survey does not provide us returns after fees. And the other point I wanted to note earlier is I made reference to that 1.1% differential in performance between the AF Korean growth portfolio and the Citadel portfolio. And what you will see is, yes, the AF Korean growth portfolio has outperformed the other portfolios, but you'll see that the variances in performance gets much less pronounced over time. Part of it is survivor bias, because those guys who did very poorly fell off the, don't exist anymore. But the variances in performance is not going to make up for the variances in fees over the long term. At least it's very unlikely that it will. This is just another example, again, a practical example for another client that we were asked to do comparisons of what the CAPES funded compared to 91 and Allan Gray, where they were invested at the time. And we did the comparison for this particular client for the 12-month and 36-month periods up to the end of January 2025. And you can see, despite 91 and Allan Gray both being blue chip investment houses, 91 managed to, on a net basis, underperform by 4.5% per annum over 3 years. Now, the compounding effect of that has a significant knock-on effect on the members. And again, here's another comparison of a real-life comparison of yet another client. And this particular comparison we did for the CEO of the company. He contacted us and said he recently joined. He just felt that he was paying too much. He transferred his money from his previous employer, and where he was paying per annum 103,000 Rand in fees, we managed to get that down to just under 45,000 Rand per annum, which is quite significant. And again, whilst this was on the Ensimini umbrella retirement fund, the same principle applies on the CAPES National Provident Fund, because Ensimini are advisors to both funds and they invested with the same investment house. So what does this mean in terms of fees? We think independent providers are able to enhance cost efficiencies of your overall package. Yes, a conglomerate provider or a big provider that provides everything might have components that are inexpensive. For example, Signia used to give free administration on the umbrella fund. That's changed over time, but are you really getting a lower overall cost? That's important. Understand all the costs. And I think what we've managed to achieve with the CAPES National Provident Fund is a very robust structure that is very competitive. I'm going to conclude by just chatting very briefly about communication, because the value of any retirement fund is directly related to how well we communicate and engage with the stakeholders. The reality is a lot of members that we deal with on CAPES are not financially literate. Having said that, and I need to be careful, we have quite a few people placed at banks and at financial services companies. So we've got people that are extremely financially literate, but the bulk of members are low earners that do not understand the complexities. So we've created an online platform that's available via the internet, as well as a smartphone application that gives members quite a lot of information. Members can pull statements. They can get their fund values at any point in time. They can update their nomination of beneficiaries at any point in time. We can use that platform to communicate. Members can also use the online channels to do savings withdrawal claims, and that's a withdrawal from your savings spot via an online platform without involving the employer. At the same time, for employer, we provide facility that instead of sending a spreadsheet and to and froing with the administrator, you're able to upload the spreadsheet online. You get an exception report immediately, and anything you require to confirm, you can deal with as you upload the information onto our platform, instead of closing payroll, waiting a couple of days, and then having to relook at the data again. Claims is done online as well. So you submit your claims online, and it's an integrated process. You can also go online to track claims. You can view member information, view statements if you want to. And what's very nice about this, especially where you have decentralized operations, instead of everything being done centrally, you can actually decentralize a lot of these administration function to site level. And a lot of our employers actually do that at site level. And then coming soon, some of these things, the WhatsApp platform, we're rolling out. We're hoping to roll that out towards the end of this quarter, early in the second quarter. And that will, again, enable members to, instead of using our smartphone application, they can now use WhatsApp to initiate savings withdrawal claims, but also to ask basic questions. For example, how do I do a savings withdrawal claim? And he gets an answer via WhatsApp-based chatbot. So that's something we're developing, and we're going to be rolling out over the course of the next couple of months, that we think is also going to continue to enhance what members experience that members have with us. And again, a big part of this, your focus, your business, is to run a business. Your focus is not to run a retirement fund or deal with retirement fund queries. Yes, definitely a big part of running the business is people focus. You want to make sure people are happy. But what we're trying to do is create platform and environments and channels that we can limit the impact on your operations, the impact that the retirement fund has in terms of time you spend from a payroll or HR perspective in dealing with basic queries. Yeah, just other things, benefit statements, trustee reports get issued. We provide a monthly investment update and fact sheet that members can access. A lot of communication we've done via SMS. We're converting that to WhatsApp once the WhatsApp platform rolls out, where we can communicate information to members as and when significant issues happen. When a member claims, we also keep the member up to date via sending SMSs. That too, we're going to replace with the WhatsApp tool to make sure the member understands, gets confirmation when we get it, and understands where the claim is in progress. That's just a very brief, high-level overview of the communication. That's something that we constantly look at ways of improving, and we constantly engage with employers as well to build custom requirements that they might have to fit in with their structures. For example, one of the bigger participating employers wanted us to allow them to link to our online platform directly from their member app. So we built a link in there, so the member goes to that link and immediately goes to the Ensimini online app, as opposed to Ensimini online web interface, as opposed to having to go to our website to interface that. And then I'm going to close, because I think my time is just about running out. The CAPES National Provident Fund, from an Ensimini perspective, and I think from a CAPES perspective, has been a tremendous success story. From 15 years ago, no members on it, to nearly 30,000. I'm rounding up quite aggressively there, 27,000 members, who most likely would not have had cover otherwise if the CAPES National Provident Fund had not existed. And we are painfully aware that the industry is a lot bigger. And obviously a big part of, from a CAPES National Provident Fund perspective, that we're embarking on this year, is to create increased awareness of the cost issues. I mentioned earlier, we had a large participant in the industry decided to consolidate all their staff on an umbrella fund with one of the traditional providers. When those staff left, the members weren't happy. They approached us, asked us to put a comparison together, and we were able to illustrate that despite the fact that that employer was consolidating 2,000 odd members into a group of 6,000, the members that were on the CAPES fund ended up paying significantly more compared to what they were paying on the CAPES fund. So obviously, we're going to continue to engage with those employers to try and make them appreciate the value that we believe CAPES can bring to members who generally traditionally have not been offered the opportunity of retirement funding. The flexibility that the fund has, I think, is unmatched. I've been in the industry for 34 years. We've got a number of other umbrella funds, and no other fund has that flexibility. From a cost perspective, the fact that the average fee is in the low 20 rands, from an administration perspective, the investment management fee is sitting at 0.7%, and even the operational cost, the governance cost, is at R4. To put in perspective, the old mutual super fund, which has got over 1 million members, their operational cost is around about R6. So I think the last thought from my side, hopefully some of what I said piqued your curiosity. Hopefully there's something in there that you want to delve into a little bit more. Obviously happy to answer any questions you have now, but happy to assist. If you have something you'd like us to have a look at, we will gladly come and have a look at what you have without charging you, just to do a basic comparison and give you a basic view of what CAPES can offer, should you already have retirement fund. And if you don't have any retirement funding for your temporary staff, of course, similarly, we're quite happy to come sit with you, see what your needs are, and build something. We've seen a lot of new entrants companies that want to offer it for the first time, that obviously can't afford to jump in with a 10% employer and 7% member contribution rate, but they phase that in over years, starting off with a low base and then gradually increase. There's quite a lot of flexibility that we can bring to the table. Lisa, thank you so much for the opportunity. Hopefully I've given you some food for thought and given the participants some food for thought. And if anybody wants to ask questions, happy to answer those now. Or of course, if you want to engage outside of this forum, please feel free to communicate with me, and me and my team will do our best to assist you.
Jaco, yes, thank you for the insightful presentation on the CAPES Provident Fund. I noticed that there is no questions at the moment in the chat box, but Jaco has shared his email address and numbers here. So if any of the members in the meeting got questions, please reach out to Jaco, or alternatively, you can reach out to Krista, and we can direct you to Jaco as well. The presentation and the recording will be shared on our website, as well as on the YouTube channel and via email to all the attendees. Jaco, I know when we engaged last year and invited you guys to do the presentation for us, the online portal was still something in the works. So congratulations on the successful launch of your online portal for the employers and the employees. This is really a fantastic milestone and a clear reflection of Ensimini's commitment to innovation and improving accessibility to our users. We wish you great success as the platform grows and continue to make a meaningful impact. So there's no questions, and I would like to thank you, Jaco. We're going to go over now to our next presenter. Thank you for your valuable engagement. Thanks, Jaco.
Thanks, Lisa.
When we talk about RMA, compliance topics in our industry are not always the ones people get excited about, but I recently had the opportunity to attend a presentation by Dr. Jessica Hutchins from Rand Mutual Assurance, where she demonstrated how proactive risk management involvement significantly reduced both the number and severity of injuries on duty across various client environments. It was a powerful reminder for me that when we move beyond compliance and become actively involved in prevention, we truly make a meaningful difference in protecting employees and strengthening our organizations. It is therefore my pleasure to hand over to the Rand Mutual Assurance team, Dr. Jessica Hutchins and a colleague, Nedu Madingi. Over to you, Jessica, and welcome.
Good morning, everybody, and thank you for the opportunity. I am not sure if you can see me. I have got my camera on, but I can't see myself. So if Lisa, can you see me?
No, unfortunately, we can't see that sparkling face this morning, but it's okay. We will look at the content that you share.
Okay,
thanks,
no, that's
Jessica.
Good. Thank you, and thank you for having me. Can you see my presentation? That's more important.
Yes, we can see your presentation.
Okay, I'm going to just put it on slideshow mode. So yeah, good morning, everybody, and thank you for the opportunity to talk about RMA in general, but also in particular where I'm coming from, the prevention program. For those that are not necessarily familiar completely with RMA, We are the administrator for workmen's compensation for the mining and metals classes. So from a COID perspective, when there's an accident or incident in the workplace, you would hear about RMA because it's an injury on duty, and you would need to put in a claim. So if you fall under the metals or mining space, then we would be the compensation provider. However, we have done more than just workmen's compensation. We also have what we call our prevention program, which is our health, safety, and wellness program. And we offer this program to our members at no cost who are in the metals class. And the objective of doing this is to try and, one, pride ourselves on being a social insurer, but two, also in terms of we're not going to give someone their hearing back or their fingers or toes in an event of an incident. So how can we actually help companies prevent incidents and accidents by means of looking at health, safety, and wellness practices? So it was run as a pilot, which we launched in 2022, and it is or has been running for 3 years at the end of last year. And I'll share a little bit of the details, but our focus is really to partner with you as the clients. It's not to find blame or fault or critique your existing health and safety practices. Sometimes it's just a fresh pair of eyes giving it a different perspective, and sometimes it generally is implementing from scratch. So we do appreciate that a lot of companies don't necessarily have the funding and expertise for health and safety. It's not that they don't see it as a priority, they just don't have the resources. So that is where we come in, and our objective is to help put in healthy and safe systems for you as the client. One, to make sure that you are legally compliant with the OSH Act, COIDA Act, and various other standards, but also to ensure that we help best practice where safety becomes a culture within your organization. So, as I say, it is quite a comprehensive program, and we've been doing it over the last 3 years, and I'll share some of the results a bit later. So, as our journey has embarked on a period of establishment in 2022, and in 2025, we had a total of about 89 companies on the program with us, reaching over 500 different sites. And our aim is to work directly with the employer. So if I always use the analogy of Jessica Steelworks, and we help implement health and safety for them. But we also have other activities that we do to get, one, a bigger reach, but also to be advocates for health and safety. And that is why we have a annual conference that we go around the country. We also have an awards ceremony every 2 years to recognize the good work that is being done in health and safety, as well as partnerships with employer associations such as CIFSA, but then also the unions, which, love them or hate them, they are a fundamental part of our ecosystem. And we have invested in training shop stewards around the country over the last 3 years to be, one, better informed of health and safety rights of employees, but also in terms of being ambassadors for health and safety. So if you were a company that was interested and you are an RMA client and you wanted to join the prevention program, what is it that you would get? And the host of offerings, or a menu that we like to just use in simplistic terms, is very much dependent on the maturity of your health and safety system. So bigger companies, larger corporates might have most of the things in place. A lot of your smaller businesses, SMEs, family-run businesses might not have everything. So our approach is always standard. We start with the gap analysis, which is like an audit, and we verify all your practices, documentation. We physically walk about your site. And from there, that will then inform what it is that we put in place for you. So it could be anything from training. It could be things like your occupational hygiene assessments, measuring environmental stresses such as noise, temperature, vibration, air quality. We do a survey of your signage and PPE, as well as your machine guarding. We don't provide the PPE or the signage, but we look at advising you what you need to have and where improvements need to be made. As Lisa said in the beginning, our approach is very much risk-based. So we help you with understanding what your hazards and risks are, and then also your risk management process. There's also access to mentoring and coaching with a dedicated resource. We help with safety communication using various means. We've got a hub where you can access toolbox talks, to making it more interactive and fun using industrial theatre. And then we also have a full wellness program. And for us, if we talk about health and safety, we can't ignore the fact that wellness is a fundamental part. You may have a really great health and safety workplace, but how employees come to work with their stresses and particular financial stress, substance abuse, could be mental health issues. And similarly, the employees may be perfectly fit for work, but the organization, in terms of its culture, lends itself to employees not wanting to be there, and you get absenteeism and all sorts of factors. So this is a host of offerings. As I say, if you are an RMA client in the metal space, you do have access to this program. As I mentioned, we have worked with the unions. We've trained over 5,000 nearly shop stewards in a basic 2-day and 3-day health and safety course. These just through pictures. So this is our really fabulous industrial theatre that a lot of companies love in terms of making safety fun and interactive through dance and music. And it really resonates with the employees so that, you know, they can take the message home much quicker than in a boring toolbox talk that's been done for years in the company. As I say, our awards and recognition program, this is the hub where you get access to toolbox talks. You can see we use a lot of visuals. We have also translated this into different vernaculars to accommodate the various languages of the employees, so Zulu, Afrikaans, and it's available in English. And then we do various measurements and assessments on site through our occupational hygiene surveys. And our wellness day has both a financial coach on site as well as sometimes our duck to encourage a little bit of excitement and an understanding of why it's important to be screened from a glucose, blood pressure, cholesterol, HIV, etc. And then the employees get access to free telephonic counseling, which is available 24/7. So just to date, as I mentioned, it had been a pilot for 3 years, and we've achieved quite a large amount. And this is not attributed to any one particular intervention that we've done. It's our holistic offering that really has enabled clients to improve. And what is quite considerable is through our financial wellness program, we've been able to save employees in total, which is these 14,000 that have gone through the program, over 1 million rand. And this is things about how to budget. You don't necessarily need 5 funeral policies, how to deal with machinistas or loan sharks, illegal garnishes, etc. And then, as I said, improved in what I call our incident rate, which I'll explain. So if we look at our impact, we've got both qualitative feedback from our bigger clients and smaller clients. If you look at some of the feedback here, in particular, one company, Lumen Special Cables, they've existed since the 1980s, and the first time they'd ever done wellness testing was through this program. Another company had quite a lot of issues with substance abuse, and through our wellness program, they were able to bring that under control. Some of the larger companies have the means and have health and safety systems in place, but it's enabled them to have independent insight. It's given them the assurance that what they're doing, but also enabled them to go to the next level of best practice. So for those of you that are more number driven than the qualitative fluffy feedback, if you look at the actual incidents of the companies, they have seen a reduction in their IODs, their injuries on duty, as well as where you look at lost time injuries since a last incident. And then from a compliance perspective, which is basically the minimum that companies should be striving for, is to look at how you're faring against the OSH Act and the various standards. And you can see in the 3 years that I've been on the program that we've been able to ensure that most companies are at least 80% compliant with the Act. Obviously, there's never a perfect situation, but we try and give them the tools and the means to get as far as they can. From our side as a business, why would we want to invest in a program like this and especially offer it at no cost? For us as a business, it helps in terms of lowering our claims rate, and therefore is less risk on us as a business. We've managed our incident rate, which is looking at the number of claims that we get, and we can see that we've, just in the group that joined in 2022, been able to reduce their incident rate by much greater than the target of 30%. We can also see actual claim volumes from a business have reduced for this group, based on giving people in the skills and necessary education in terms of how to investigate accidents, incidents, what to do to prevent them. And then our two biggest claims that we get, in particular in the metal space, is foreign body objects to the eyes, so dust, welding sparks, etc., pieces of metal that get into employees' eyes, and then obviously injuries to the hand and wrist. And this is, you can see, trending quite well, where we've been able to reduce these numbers by 50%. So as I say, the program really has had some remarkable insights as well as benefits for both the employer and for us as a business. And we really want to demonstrate that we are committed to helping our employees in the workplace, but also the employer. So for you as a business, why would it make sense to join? And obviously, I'm only showing you the short-term goals, but there is huge benefit investing in health and safety. And it's not just because it's the right thing to do. We often say it's a moral and ethical obligation that employers have health and safety workplaces, but there are also financial benefits in terms of saving money from a production perspective. If you think about, if you have an incident, there's downtime, there's sometimes if it's really bad, you may not be able to resume work. You might get the Department of Labor coming onto your site and giving you a prohibition notice. So it does impact on the bottom line, but also in terms of human resource savings. If your employees are physically and mentally fit for work, it should lower absenteeism and time off due to being sick or not wanting to come to work. Through our various interventions, ensuring that there are fair and just labor practices. A lot of the companies, if you are dealing as a contractor, they might want to verify your health and safety, and therefore it helps you secure business if you can show and demonstrate that you are a company that takes safety seriously. And then obviously in terms of training, there are benefits to that as well. So my last slide is just to explain that the program, as it was a pilot, it's not finishing. We are continuing with the program, and we would like to expand into the metals class more than the 89 companies. The program, we will be changing from a 3-year to a 2-year program, and this is one to speed up our interventions, but also to get better traction internally in the companies. We are also embarking on this program in our mining class, and we want to ensure that we help upskill and develop health and safety professionals in the country. One of the findings we've noticed is not many of the companies have qualified health and safety practitioners, and how do we contribute to advancing the knowledge. And then, as I say, our advocacy, such as our awards and our conferences, will continue, and we will elevate the wellness program, because it is something that I think every single person is feeling the pinch, whether it's financial that leads to substance abuse or substance abuse that leads to financial, but also ensuring that we are both physically and mentally healthy for the workplace. So, Lisa, that's it from my side. Just again, apologies that the camera isn't working. It was working earlier in one of my meetings, but Murphy's Law. But yeah, happy to have any questions. I know my colleague is still going to be talking to you a lot about RMA this morning, but this was just a sort of a taster of one of the offerings that we have over and above the COIDA and the compensation side. Thanks, Lisa.
Jessica, thank you so much for your presentation. And I must really say, I want to congratulate yourself and RMA on the impact that this pilot program has demonstrated through your initiative. This is really inspiring to see how proactive involvement and focused risk management can make such a meaningful difference in reducing workplace injuries and improving safety outcomes. So well done with that. And thank you for your time. We are handing over now to Nedu, who will then continue with the presentation for RMA. Thanks. Is there any questions perhaps that anybody has now for Jessica? They can quickly pop them into the chat box before she leaves us, and then we can move over to Nedu. I don't see any questions in the chat box. Maybe we can just give it a minute or so, Jessica.
Yeah, no problem. And as I say, Sido is here as well. So if there are questions that come to mind, otherwise I'm happy to put my email address in the chat group if anyone wants to email me if they're a bit shy.
Okay. Perhaps you can do that for us,
I'll
and
do
then we
that.
will move over now to
Sure.
Sidu. Sidu, welcome to the presentation. We are looking forward to hear what you've got to share with us. Over to you.
Thank you very much. Thank you very much, Liz. Thank you very much, Dr. Jess, for your presentation as well. All right, so just a quick introduction. My name is Ngedo Mdingi. I am the stakeholder training consultant with RMA. So it's one of the initiatives that RMA has came with is to train our stakeholders for free on how to navigate with RMA, how to report your injuries on duty, should there be a need on how to report those in a very unfortunate incident your employees are injured on duty. So our presentation will be quick. I just wanted confirmation from your side. Liz, can you see our presentation, and then can we start?
Yes, I can see your presentation. You can continue. Thank you.
Thank you very much, Liz. All right, so I will just take it over from where Dr. Jess left. Just a quick background, firstly, of when RMA started and how far we came from then and how we are at this stage. So RMA is Rand Mutual Assurance Company. It was established in 1894. Administering the COIDA policy. In that case, in 1894, there was no other policy to cover employees should they be injured in duty. So RMA was the first of its kinds that they discovered that in the mining, they must cover employees should they be injured whilst they are performing their work of scope. So this started in 1895. And then fast forward to 1936, another company came through to do the same, FEM, which is FEMA. It's only doing that on the construction industry. So RMA has and mining, and then FEMA came with the construction. Then the state did come through eventually in 1941, introduced WCA, workmen's compensation. And then fast forward to what we are currently working under now, which is the COIDA Act, Compensation for Your Occupational Accidents and Diseases Act, your COIDA. It's Act 130 of 1993. So now each and every company in South Africa is working in accordance to that act. And we as RMA, we are administering the COIDA Act. If you are in the mining industry, as well as in the metal, iron, or steel, or motor industry, or those related industry. So RMA, as Dr. Jess did mention, we only cover the two entities, the mining and the metal industry. So another thing that's good about the COIDA Act, in 2020, there was an amendment bill. So the state and the president signed the bill to amend the act. It includes now changes like your rehabilitation and integration of going back to work. So over and above what Dr. Jess was saying, that we have an initiative of a prevention program. Already with RMA, there is a rehabilitation center that has been opened. And also we are in engagements with other healthcare providers across the country to assist employees who have been injured in work in ensuring that their rehabilitation process and integration of going back to work is a smooth process. So over and above this COIDA policy, RMA as a business has a BOSS strategy, which is a business of significant strategy, where RMA now builds a more diversified insurance company. This means over and above this COIDA product that we have other insurance products to ensure that employees are covered at any time, whether they are at work, whether they are not at work. So we have other covers that can ensure that your employees are covered holistically. So these are at a better, when you see a need in your company that you have a certain need that you want to cover your employees on, then we can cover that need. So this video, because Dr. Jess has mentioned everything on the video, I think it will be wise to skip the video and go straight to another initiative that RMA has offering or is offering to the companies that are with RMA. And this initiative is free of charge. So we have our rehabilitation center, where we bring together a multidisciplinary team of rehabilitation specialists, and it is at our facility, which is in Velcom. We have a healthcare rehabilitation center there to ensure that there is an optimum patient outcome. So if your employee has been injured on duty, as RMA and as per the COIDA amendment, this is where we ensure that your employee gets back to work or in their living environment, mentally and physically fit. In our rehab center, we do have case management to unlock the occupancy, and also we have for restoring the function of a functionality or the function of independence, we have a multidisciplinary rehab team where we will include your physiotherapist, we have your occupational therapist, speech therapist, dietitians that will ensure that should an employee be injured on duty, they are sent to these specialists to ensure their speedy recovery and ensure that their range of movement is improved and mentally they are fit to go either back to work or their living environment. And then over and above that, for a driving a recovery through a continuous care, we have your caregivers, your general nursing, and also your rehabilitation and nursing at the faculty. And encouraging a clinical excellence, we do have some GPs and your urologist. And finally, on this rehab one, for enabling now that the employee return to their working environment or their living environments, which was enabling the reintegration into a work and also economic activities in the center. There is a vocational reskilling, where if maybe a person was a miner and there were expertise were grinding inside the mine, but now they have maybe there was a rock fall, they are injured, highly injured, and maybe they are now have to be in a wheelchair and cannot longer go to the mine, inside the mine, to do the rock drilling. So we will reskill that employee. For an example, if maybe they are interested on training, maybe they are expertise in drilling, now they can train other or new employees on how drilling is done in the mining specifically center. Or if they have new interest, maybe a person is interested in farming or reskill, we will do reskilling them, giving them more skills on how to do farming in a professional manner. So these are the initiatives that are over and above the policy that you are paying through to RMA that are coming for you, as RMA is a social insurer. These are all free of charge to you as the employer who has joined with RMA. So our rehabilitation or program mainly focusing on restoring the dignity and the quality of life for employees. We did mention there is clinical rehabilitation, where we ensure that the physique of the person after an incident is back to normality, or they are undergoing or going through physiotherapies or the occupational therapies to ensure that they can go to other occupations, or they can still go to the same occupation even after an incident has happened. Our vocational rehabilitation, just mentioned, there were a few, maybe like the farming or rescaling of the employee up until social integration, where they are very fit to go back to their working environment. And at RMA, we cannot do this alone, obviously. We have to have the willingness from the employee or the workers themselves to undergo these programs, and with assistance with you, the employer, to assist and give guardians. And obviously, after an incident, and person would also need their family to be there for them in these difficult times, so that they can heal easily. And if the family is on board, the company is on board, RMA is in support, it makes it easier for the injured employee to heal as well. And most importantly, our healthcare providers, be it the doctors, your occupational therapists, physiotherapists, all those that are in specialists that we used in this process to get the employee back to their normal state, or physically and mentally fit to be back in their environment. Obviously, we also use the labor unions, which in most cases, these people, it is where they go find strength from and advice from. So we associated with them as well to ensure the employees are back to work. So these initiatives are driven or taken by RMA for free in all the companies that are covered with RMA. That I have a similar problem with the Dr. Jess. Just my camera has just informed me that it has stopped working. Just leaves the question, is it only the camera? Is every other thing fine?
Sido, yes, we can still see your presentation. It's fine. You can turn off your camera. Thanks.
Okay, noted. Thank you. Camera is off. Right. Now, so those were the most initiatives I wanted to share over and above the prevention program. Should an incident happen, we also have the rehabilitation and integration program. And these are all at no cost to you as the employer. Right, so just a quick understanding now of the COIDA policy. And for us at RMA, we have been in this industry for 132 years this year, administering the compensation benefits related to claims for your occupational injuries and diseases. And we do this in accordance with Compensation for Occupational Injuries and Disease Act. I did mention it's Act 130 of 1993. And most people would call it the COIDA Act. And for us at RMA, a claim is not just a claim. We go beyond what is required by the law to ensure that the needs of your claimants are taken care of. We are passionate about caring for their lives and those of their families. And so embody our brand promise that RMA is a caring, a compassionate, and a compensation company. We are the administrator of this policy of choice, and we have a vast experience of 130 years administering occupational accidents as well as occupational diseases. So we are the go-to-go people should you want to cover your employees for occupational incident, but ensure that you are in the mining or in the class 13, previously known as class 13, now it's known as class L industry. If your company is there, you will be administered by RMA. All right, so understanding this policy further, RMA is a social insurer, as you have seen that we've mentioned with Dr. Jess, those initiatives that we come through with RMA, which be it we want giving out a prevention program for free, your other programs that we run that we have mentioned also for free, and these benefits to the employees as well as to the employers. All right, as now a social insurer, Rand Mutual or RMA is licensed to administer now this called policy, and we do have this license. It is in section 30 of the COIDA Act, and it is under the aspects of the compensation fund, and its mandate is derived from section 27(1)(c) of the Constitution, which now gives the citizens the right to social security, which is provided in the terms of the Act to injured or diseased employees. Right. Which companies do we cover? Subclass L, previously known as class 13. These are the employers now that are belonging to, if you are working with iron, steel, artificial limbs, galvanizing, garages, metal, motor, and related industry. The metal industry can be covered with RMA. Same as previously known as class 4, now it's classified as class CDK, which is your employers that are belonging to the mining and mining related industries are all covered with RMA. And as a social insurer, these are our beneficiaries, you as all the employees in the mining and the metal industry, as well as our pensioners. I will explain more on how do we get pensioners instead of the employees. And then who are we? We are administering this COIDA policy as well as life, short and also long-term insurance, short-term and life insurances. That's what we cover with RMA. Our customers is the employers in the mining as well as in the metal industry. Our capabilities is to administer this COIDA policy, the life and IT system, and also life insurance. And our purpose is to empower employees and ensuring that their dignity and also enabling their dreams even after they were injured at work. And our legacy is for over 132 years this year, pioneering the workers' compensation, the COIDA Act. And our critical stakeholders, to mention the labor organization, compensation fund, Department of Labor, shareholders, as well as our policy holders. All right, so this is the policy, the COIDA policy, and an accident as per the policy means that it must arise out of and in the course of employees' employment, resulting personal injury, illness, or even death. So if the employee is at work doing their work's duties, they are all covered at all times should an accident happen, or should they contract an occupational disease, which will be an illness that is caused by the handling of or exposure to substances or agents in a workplace. So it can take some time for a disease to become noticeable. It's not like the accident that happens instantly. A disease do take some time. All right, so what is it that we require from you as the company so that we can give you a letter of good standing for this COID policy. You are required to renew this COID policy and any other policy you may have with RMA, and this is done annually. And in order to do that, you are obliged to submit your actual as well as your estimated earnings. You will be invoiced, pay the required invoice, and once you have done that, you will be issued with a letter of good standing. So the process is different if you are in the mining or in the metal industry. And we do have engagements that take place each renewal period following for questions, clarity. So in March, we will be going across provinces in South Africa, just in the metal industry. For that, there will be a roadshow in Gqeberha, Western Cape, Eastern Cape, Durban, KZN, and even Gauteng, Mpumalanga. I think, yes, those are the provinces that will be traveling in March, so that if there are questions related to how do we submit our earnings, how is our rate calculated, then we can be there and answer those questions live. So we do these initiatives or these road shows each and every year before it is time for renewals, so that we update companies on each and every improvement that has been in the year, as well as the maximum amount or the capped amounts to be renewed on. So this is the initiative that we also drive for free, to go to the companies, do a roadshow where the companies are mostly found, so that if they have questions, they can directly speak to RMA people regarding renewals. All right. So your policy renewals, it's easier. It's done as your premium will be your last submitted earnings. We add inflation, multiply by the rate, and then your COID premiums do not add any VAT. They are VAT free, but any other products will contract a 15% off VAT. And in order for you to get a letter of good standing, once you're fully up to date with submitting the return of earnings, you pay the required premium. Your letter of good standing is available for you to download anytime on your free time. We have a portal. You can just log in the portal. If maybe there's Department of Labor requesting for a letter of good standing, you log into the portal, you simply go and download the letter of good standing without even calling anyone from RMA. So these are the initiatives that are very good for companies there. And to report your accidents, we take that as per Section 38 and 39 of the COID Act, that if the employee has been in an accident or someone have witnessed an incident, please ensure that they report those to you as the company, their HR, payroll, health and safety representative or departments as soon as possible. And for you, you have to report those accidents to RMA now within 7 days. And if it is an occupational disease, report it within 14 days after the employee has been diagnosed with that disease. But you still have up until a year to report the accident. So RMA has made a portal as well. Even if you want to report an accident, you don't have to call anyone or email anyone from RMA. You can simply log into the portal. There will be a space for you to capture an accident, and immediately it will ask for what happened on the portal. You just put what happened, where was the employee, what were they doing, how many employees were injured. You put the personal details of that employee, you put the body parts that were injured, and immediately after you press the submit button, you get your RMD1 form or your claim form with the claim number. You can take this person to a private hospital. They will be taken as an IOD patient. So we have simplified these things. You don't have to call anyone from RMA to get a claim form with a claim number. You can simply log in onto our portal and report your accident on your own time. You can do that even in a smartphone as long as you have internet, if in a desktop, a laptop, a tablet. So we have simplified these. And previously, you would have to call someone from RMA to get a claim form. In nowadays, it is within your fingertips. You just log in onto the portal. And as per the COIDA Act, these 4 are the main benefits your employees will have. The medical expenses, RMA will pay for all reasonable medical expenses related to an accident or a disease. We will pay for the hospitalization costs, the medical treatment, including the doctors and specialist costs, and even the medicine that the employee is given. So if there's an injury on duty, there's no co-payments paid by the employer should the person be taken for a healthcare provider. RMA covers all costs. And if your employees, when the hospital go to the hospital, are booked off sick, then RMA will have to pay for temporary total disablement benefits, the days that your employee has been booked off sick for. We pay this benefit at 75% of their total earnings. So you have employees that are not going to work but booked off sick. For that period, RMA will give them income. So as a company, you will pay that employee and you will claim back the money you have paid to their employee. So that's the second benefit of the COIDA. The third one, in an instance now, after the doctors have tried everything, they have reached MMI. However, unfortunately, the employee has a permanent disability or there is impairment to the employee. And then in this case, this is where now RMA will compensate the injured employee. And the compensation can be either a lump sum, once-off payment, or a lifetime pension. So for all employees who would have a disability, between 1% and 30% will receive a lump sum. And those who have a greater disability greater than 30%, from 31% to 100% permanent disabled, then that employee will receive a pension, which goes back to our slide where we mentioned that we have employees and pensioners. So there are employees that are on active pension with RMA, receiving pension each and every month. And then the last benefit is in a very unfortunate incident. Now we lose an employee due to an injury or disease at work. Then these benefits will obviously go to their dependents, like the spouse and children. Children must be lower than 18 years of age. Spouse must be legally married spouse to receive the benefits. Right, so this is a high level of when an incident happens at workplace, you as the employer reports that to RMA within 7 days. If you report it, immediately you will receive your claim number, send the person to the hospital. The hospital has also 7 days to send a first medical report so that RMA accepts liability for this claim and open the claim for payments. And up until the hospital sends a progress report, up until we receive a final medical report. On a final medical report, this is where we will assess, is there any permanent disability? While that process is going through, if the employee is booked off sick, we pay the company for the days the employee have lost. Remember, the TT days have to be lost days of more than 3 consecutive days. Then on the final report, we check if there's permanent impairment, disability. In that case, we assess, is this disability going to be paid as a lump sum or a pension to the employee? up until the case is closed. So these are the processes of how an injury on duty case is handled with RMA. Then we are almost done. Let me see the next slide. All right. So the next slide is now saying, over and above the COID legislation or the COID policy, we also have other 14 policies as a business of significance that you and your company can choose which one do you need. So for an instance, I'll just mention one, just the first one. The COID policy has a maximum compensation. And then if you have employees, let's say on a monthly basis, earning over this maximum compensation, unfortunately, we have to pay up until that much. However, because we know in this industry there are employees earning way over above this COID threshold, then we have an augmentation policy for those employees. Should you be injured on duty earning, let's say, 80,000 Rand a month, the COID tariff is at 39,000. If you have an augmentation policy, the COID will pay the 39,000 and odd, and augmentation will add up until that 80,000 that you are earning, so that you are not disadvantaged at all after the incident. So these other policies, we look at gaps where COID is not paying, and then we pay. For an instance where there's a cover for or a cover for employees against accidents or injury that are not work-related. So COID will cover the work-related, but the GPA policy will cover non-work-related accidents. So we have those covers that we have. Please feel free to contact us. And then how do we then determine percentage of permanent disability or disability or impairment? It is on Schedule 2 of the COID Act. How much must be paid? Those minimum that I was talking about, if you are booked off sick for the whole month, your maximum is at 39,573. If you earn more than this, you booked off the whole month, we have to pay 39,573. However, if you have augmentation, that's where that policy can kick in and pay the full 80,000. All right. So this is per Schedule 4 of the COID Act. How do we calculate the compensation to injured employee and also pay pensions, pensioners, or the dependents of the injured or dependents of the deceased? I think that is it from me. So over and above that, we offer training to employers. Because we have a portal, we will train you on a month-to-month basis on how to use the portal. Maybe we do understand some companies an accident happens once, maybe in 6 months. A month before or a month of that accident, there will be a training informing you on what to do should you have an injury on duty. These trainings are also supplied free of charge. We do not charge for these trainings. We train the employer, we train the healthcare provider as well, how to claim on injured should they have a patient who was injured on duty. Right, I think now we will take questions. That is it from my side.
Thank you.
Yes.
Thank you
Liz.
so much for your insightful presentation. If there's any questions, please pop it in the chat box. I don't see any questions yet. I would just like to say that I really think the rehabilitation program that RMA offers to its members is truly impressive. The initiatives like these play a pivotal role in supporting the employee's recovery journey while also strengthening workplace well-being. And well done to you and the RMA team for the meaningful impact that you are making. I don't see any
Thank you.
questions
Thanks.
pop up, so I have shared your email address with the audience. You guys can reach out to Nsedu or alternatively to Krista. The slides and the recording will also be shared with all our members. The RMA Solutions and the CAPES National Provident Fund represents a significant value add to our TES members, specifically enabling you to offer your clients stronger employee protection, competitive benefit structures, and enhanced compliance support with an evolving labour environment. We also recognize how critical the COIDA or RMA letter of good standing is for our clients' compliance records and health and safety files, and making these solutions not only beneficial but actually essential in supporting the responsible and compliant workforce management. So that is the end. On behalf of the TESD, I would like to thank you guys for joining us. We appreciate your commitment to the industry excellence and look forward to engage with you again in future sessions. Have a good day and a productive day ahead. Thank you.